Shelter went up 0.8% in December 2022. It's actually data that is from June or earlier in 2022. And so it's not really showing what's going on with shelter costs in the United States right now. We are approaching what is known as the terminal rate, which is basically the highest point the Fed is going to set the federal funds rate in this tightening cycle. New inflation data for December of 2022 was just released, and on the surface, it looks really good. The headline Consumer Price Index, known as the CPI, dropped from 7.1% down to 6.5%. And the core CPI, which is super important because it strips out food and energy costs because those are too volatile, they dropped from 6% down to 5.7%. These are both considerable drops and very encouraging. But when it comes to inflation information and data, there is a lot of nuance and there's a lot of things to understand to fully get a picture of what is happening in our economy. So what I'm going to do today is dive into the details of the Consumer Price Index report so you can get a full understanding of what's going on with inflation. And in the second half of the video, I'm going to provide a forecast and some predictions about what I think might happen with inflation in 2023. Hey, what's going on, everyone? My name is Dave Meyer, Vice President of Data and Analytics at BiggerPockets. And as part of my job, I get to analyze the economy and the real estate market. And I talk about it every single week, twice a week, actually, in my podcast called On the Market. And you can check that out on Spotify, Apple, or we actually have our own YouTube channel called On the Market where you can check that out. Before we get into today's topic, if you like this video or videos like this, please make sure to give us a thumbs up. It really helps us with the YouTube algorithm. All right, let's get into today's topic, which is going to be the Consumer Price Index for December of 2022. And so I'm going to actually just share my screen and we can talk about this. If you want to follow along or just download and look at this data for yourself, just go to bls.gov or Google CPI release and you can just find the report that I am talking about. It's all publicly available information. This chart gives us the majority of the information that we need to know about what's going on with the inflation in the US right now. When we look at the chart, you look at this first row, it says all items. So this is the highest level of inflation. This is when you hear something on the news or you see it in a newspaper. This is usually what they're talking about. And these numbers here to the right represent percentages. So what you can see, this column all the way on the right, 6.5%, that is year over year inflation growth. So that is basically measuring how much have prices in the US gone up since from December 2021 to December of 2022. And what this tells us is 6.5%. So we know that all prices as measured by the CPI, it's not a perfect way to measure inflation, but as measured by the CPI, prices have gone up 6.5%. If you want to dig into some of the specific topics that have been going on here, you can do that. So food, which has been a huge driver of inflation, is still up 10.4%. That is really considerable, way above the average for all of the prices, are still up 10.4%. If you look at energy, that is still up 7.3%, which is really high. But if you go back to July or August, energy prices were actually up over 20% year over year. So this actually represents very significant cooling in the energy sector. But what I like to look at, and I like to look at it because the Fed likes to look at it, is what we call the core CPI. I alluded to this at the beginning, but basically, a lot of economists and people like to strip out food and energy costs because they're super volatile, right? We've seen energy costs go crazy this year. In January and February, they were normal. They spiked up to huge levels in the summer. Now they're back down to about where they were earlier this year. A lot of volatility. And so to get a better sense of what's going on with more durable, sticky goods, there's this item here, there's this line here called all items less food and energy. And what you see here is that has gone up 5.7% year over year. And again, that is down from 6% in the previous month. So it's moving in the right direction, but 5.7% core inflation is still way, way, way too high. And there's a long way to go. But of course, for things to get back to normal, they have to start trending downward, start trending in the right direction. And that's what we're seeing in this report. One thing I do want to call out too before we move into the monthly data is that shelter costs. This is a really important one, especially for any real estate investors or people who work in the real estate industry here. Shelter costs are still up 7%, and they went up 0.8% in the last month. And shelter costs have been one of the major drivers of inflation over the last couple of years. We all know that home prices have gone insane, rent has exploded, and so you still see that shelter costs are up 7.5% year over year. But all told, when I look at this report and I look at the year-over-year data, which is what we've been talking about in this last column, I think it all is very encouraging. It's all starting to trend downward, and that's what we all want to see. That is the best thing to happen for the country. That's the best thing to happen for the economy. People have been hit really hard. The value of their savings, the value of their money has been depleted, and hopefully this is continuation of a trend that will end that cycle of inflation. Now, if you want to know what's going to happen over the next couple of years, because looking at year-over-year data just looks backwards, right? That's just what happened last year. If you want to get a sense of what might happen in the coming year, I think the more important data point here is the monthly data. So if you're looking at my screen and you see this December 2022 column, this is what you want to pay attention to. It is the numbers in this column represent the change in prices from November of 2022 to December of 2022. So if you look at the all items here, you can see negative 0.1. That, to me, is the best, the brightest spot of this report. All items on the CPI went down in price. There was actually deflation in prices between November and December, and that is very significant. It went down 0.1%, and that's really good. If you look down the line here at the different categories, you can see that this was driven primarily by energy costs. You can see here that all energy costs went down by about 4.5%. We see that gasoline was about 9%. So that's really significant, and that drove a lot of the decline here. When you look at the core CPI again, this is, to me, I said the bright spot was monthly data for the CPI. To me, the dark spot on this report is the monthly data for core CPI. When you look at all items less food and energy, again, this is core CPI, it went up 0.3%. Which is an increase from last month. In November, it went up only 0.2%. This month, it went up 0.3%. So that's an acceleration of core CPI, but I'm not personally too concerned about that. But that, to me, is the worst part of this report and the most discouraging, I should say. When you look at other things like new vehicles, those are going down in price and all that. Now, the reason I say that I think core CPI is going to go down is just not my opinion. It's not just a feeling. It's actually backed by some evidence. And it comes back to this idea of shelter, which I was talking about before. So shelter measures the cost of housing in the United States, and it measures both homeowners and rent. So it measures rent across the country and something that they call homeowners equivalent rent, which is basically what a homeowner would pay in rent if they rented their house rather than owned it. When you look at that, the way it is calculated is honestly pretty terrible. So you can see here that the CPI has been showing since July or August consistently high monthly inflation numbers, right? Like in June it was 0.6, then 0.5, then 0.7. So we've seen, okay, shelter is going up and up and up throughout 2022. But if you are a real estate investor, if you're in this industry, if you look at private sector data, you know that the opposite is happening, right? Rents actually peaked back in August and have started coming down. Home prices peaked back in May or June and have started to come down. So what's the deal with that? Basically, the way the Consumer Price Index measures shelter costs lags 6 to 12 months. Don't ask me why. It's a terrible way of collecting data, but it lags 6 to 12 months. So when we're seeing in this report that the shelter went up 0.8% in December 2022, it's actually data that is from June or earlier in 2022. And so it's not really showing what's going on with shelter costs in the United States right now. Why I think that it means that the core CPI will come down is that eventually the CPI way of collecting data will catch up and we'll start to see the reality reflected in the CPI. And the reality, again, is that prices of shelter are starting to come down. So to me, that is a very good reason why core CPI will probably fall. I don't know if it's going to be in January or February or March, but at some point in the first half of 2023, we're going to start to see the core CPI come down in a significant way because shelter has been one of the main things that prop up the core CPI, and it is going to fall. It is going to fall over the next couple months. So that's this report. If you want to look into more of the report, you can. But before we get out of here, I do want to show you all something. And it's this report, this analysis that I did that shows where inflation might go throughout the rest of this year. And I know this chart can be a little bit confusing to understand, so let me just explain it. This is the expected annual inflation by monthly inflation rate. So again, When we talk about the CPI, when inflation being 6.5%, that is the annual inflation. That's year over year. But what I did here is forecasted what our annual inflation is going to be based on what's been happening most recently. Most recently, as of today, recording this, will come out a couple days later, but as of the most recent CPI data, which was for December of 2022, prices fell 0.1%. So I extrapolate out the data and say, if the monthly rate stays at 0.1% for the next 12 months, where is inflation going to be? Well, it's going to be negative. We're actually going to see deflation, which is not really that great. It's not as great as it sounds to be. So that's where we would be if things stayed at 0.1%. I don't think that's going to happen. I think this month it was great that we had negative inflation. I don't personally expect that to continue. I think we're going to see modest ones, but you can go down the line. So if you think prices are actually going to stay flat, which is actually, if you average the last 2 months, if you average November and December, prices have stayed flat in November and December, which is very encouraging. So if you expect that to continue, then you can see that we will actually be below the Federal Reserve's target rate of 2% annual inflation by June. It's 0.9% by June. That would be a huge victory for the Fed and great for the U.S. economy. Personally, I don't think we're going to be flat or 1%. I think we're still going to see some inflation, and I think it will probably come in between 1.1% and 0.2%. Actually, if you go back 6 months and average the monthly increase for the last 6 months since July, it's 0.16%. So that's kind of why I think it's going to fall into this range. So I think this column where it's 0.1% or this column 0.2% are the most likely scenarios. And if that is true, if it's 0.1%, then again, we will be under the Fed's target rate by 1.5%. If it's more towards the 0.2% per month increases, we won't hit the Fed's target rate this year, but we'll get pretty darn close in October at 2.1%. If you disagree with me, you're more than welcome to, and you think inflation's going to pick back up, then go up to 0.3% per month, 4% per month. Just for the record, that hasn't happened in several months, but if you think it's going to accelerate from here, you can see on this chart where inflation would go. So if it goes up to 0.5% per month, we'll end next year with 7.2% inflation, and so on and so forth. So you can check that out and just look at what you think to be true about monthly inflation report. You know, the Fed has been raising interest rates up and up and up, and that is causing all these ripple effects through the economy, and they're doing it to fight inflation. But now, as we can see, this is the 6th consecutive month where inflation has fallen, and the trends are very encouraging that inflation is going to continue to fall. I don't know for sure how fast and when it's going to get below the Fed's target, but the trend is very clear that inflation is starting to come down. That said, I do expect that the Fed is going to continue raising interest rates at least in the beginning of 2023. I think we are approaching what is known as the terminal rate, which is basically the highest point the Fed is going to set the federal funds rate in this tightening cycle. Right now, the federal funds rate is between 4 and 4.25%. I'm guessing it's going to end up somewhere between 4.75 and 5%, it's somewhere in the spring, in the second quarter of this year, and that's where they're going to hold it. That's what it looks like right now. It could absolutely change, but right now, it seems like they don't need to raise interest rates that much more. But because the Fed is so hyper-focused on bringing down inflation, even though the inflation signs are very encouraging, I think they're going to keep rising interest rates to send a signal to the economy that easy money is not coming back. It's not coming back anytime soon. And when I say that the terminal rate might be approached soon at 4.75 or 5% or something like that, I'm not saying that the Fed is going to cut rates after that. They have been very clear, and they actually issued guidance in December that stated that they are not going to lower interest rates in 2023. Now, some people on Wall Street, bond investors, they're calling that bet. They're calling the bluff of the Fed. They said they're going to lower it in 2023. I don't know if that's true. For me, personally, I think the more conservative, wiser thing to do is take the Fed at their word and assume that the Fed is not going to cut interest rates in 2023, and instead, sometime in 2024, they will probably do that. What that means for mortgage rates is unclear. We have already seen that mortgage rates have come down off their peak. They were about 7.2% in November. They're now at about 6.2% a couple months later. And I think this inflation report is going to help keep mortgage rates a little bit lower. Of course, I don't know what's going to happen, but I do think it is unlikely at this scenario, at this point in time, in January of 2023, it is looking unlikely that we are going to see any period of time with sustained mortgage rates over 7%. And instead, we're probably going to fluctuate between 6 and 7% for the next couple of months while we still see more about what's going to happen with the economy over the next couple of months. All right, well, that is my take for today. Hopefully this helps you understand what is going on with inflation and how to interpret inflation data to make more informed investing and financial decisions for yourself. If you have any questions for me about this video or any thoughts on ideas on what other videos I could create, please hit me up on Instagram where I'm at The Data Deli. Thank you so much for watching. I'll see you next week.